The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Taking a look at crude oil immediately. That closed yesterday. Pretty damning for the longs. And to focus on this a little bit, we talked about this crowding action below. On to the unfair lows here. And the close below. And what that really means for crude oil, as it wasn't really, in my opinion, forming a bottom down here, we were considering looking at this as we're going to have a whoosh sound. Close below, haven't even thought about retesting that area of support, now resistance. And we're trading in the 76 area now. We talked about this general 80 area being, kind of Custer's last stance on oil, and that really is unfolding in almost a long covering situation now. So, again, have been pretty bearish on crude oil here, bouncing around down here and kind of gathering momentum to go lower, and that's finally happened after our show yesterday. So that's kind of the big point today, and that's going to be kind of a driving factor for a lot of things that the economy will be looking at now. So, by the way, we're going to have Eric Courtney on again in about right after the first break, and I'm going to cover a lot with him, some fundamentals that we need to talk about and how those kind of dovetail into some stocks and some ETFs and futures that we're going to look at. But just wanted to kind of make note of crude oil here. And, wow. So what do you do when you're right like that? You expect to be right. You expect to, over time, have the probabilities in your favor and try to leverage those probabilities. So what we're doing here is this is business as usual, and we kind of look at trading like that. In my opinion, you've got to kind of, okay, we expect to do well. We're going to expect also to lose at times. You're going to try to figure out, how to increase the risk reward. And the risk reward on oil here, there's really not a lot of reasons to get out of this short situation at this state. No new profiles below. And these are the kind of trades that you can make quite a bit of coin on and hopefully make your whole month a lot of times. So, you get chopped up quite a bit. That's a little discouraging, but you want to let trades kind of breathe like a fine wine and unfold. And this is one of those trades right now. It just showed its hand pretty early. And that's kind of what's going on with crude oil. Here's the euro, a very similar situation. We kind of looked at this from the short side only, trying to eliminate any kind of buying the support areas on the euro just because of all the impending doom that Europe's going through, and just trying to sell rallies, trying to accommodate a little bit of fundamental thought processes into the technicals here, but very kind of similar to crude oil in a way, just using the profiles to guide you down, so to speak. And what do we do now? The only thing that I see a little bit divergence-wise here, if you will, is and we're below weekly and daily profiles now on crude oil. We closed below. We kind of haven't retested those weekly unfair lows. The only thing that's a little concerning on the euro is that we're making lower lows and making higher lows on Navigator here, if you can see that. And, to me, that may indicate that we, may be a little ahead of ourselves on the short side now. So I think we've had a good move down. We've had some targets hit on the 240s after the show yesterday down here. And, the selling points on the euro now, as we spoke of, I believe yesterday, 125.54. So just be patient. And if we break that area on the euro, I think we're going to have to just kind of sit on the sidelines for a while. The yen did have a little bit of a turnaround here. But, again, we talked about trying to relax the stops on this trade a little bit, maybe lighten up. Can't go wrong taking some profits, but kind of turning things into a free trade. And this has kind of been one of those situations, 105.44, then breaking out above 108.39. And, we talked about 115, some targets up there. That hasn't been hit. But you kind of like to see this. We hope that we kind of see almost a little flag pennant situation forming here, and it would be great to have another profile up here. But the 240 situation, we talked about support now in the short term being 113. We hit 113.13 in the past 4 hours, I believe. So that's pretty close, and this is going to kind of be, short-term support for this. And then you got a lot bigger support, short-term support also again at 110.77 down below on the euro. Let's take a look at, here. Let's get this right back where it's supposed to be. Okay. Let's take a look at gold really quick. Talked about not trying to play the bounce on here. There's really nothing down here from our new profiles, whatever, on gold, but similar situation as the euro. You see on the daily, lower lows on price action, higher lows on navigator down below. So that's something that's going to have to be paid attention to also, just like the euro. You hope you get another profile here, and you hope the profile high is a little bit higher. But right now there's not a lot of reasons to try to pick a bottom on gold, even though that divergence is sitting there. There's just nothing to key off of on a long-term to intermediate-term basis. But you do have some inflection points on the short term on gold to pay attention to. I'll just restate those: 1164 and 1181. It'd be nice to get a rally back up to 1181. That'd be a good place to pick a battle on gold on the short side. Silver, just kind of a hopeless situation here on silver. New targets on the short term down below. We reached them the other day, but again, a retest around 1581 is going to kind of be pretty powerful for this, and don't have any divergence patterns sitting up there in our face on silver. So obviously this has been the weaker of the two metals. Let me pull my time up here. The weaker of the two metals, and we're just going to stick with that. So again, those are the inflection points to pay attention to on gold and silver. Taking a look at the 10-year. Talked about this from the long side only. We kind of dipped below yesterday, that inflection point we talked about, 126.09, coupled with our weekly 126.10, if you can see that. That dip below, based on your appetite for risk, let's just kind of point out what the dip is, and let's just go through a little bit of a trader's scenario here. Low, 125.30.31. It's a little bit lower than what my appetite for risk is, but again, this is a stop out situation for me. But as we climb back above that inflection point, considering that we're looking at this primarily from the long side, we're back in the game above, and put the stops back in and let the trade try to unfold again. So that's the situation on the 10-year. Let's take a look at the S&Ps. We're going to cover quite a bit here in the first segment because Eric's going to take up a pretty good chunk of time that I think you're all going to enjoy in a little bit here. So the weekly situation, we talked about the 2014 50 area that seemingly held. The breadth is still relatively positive, and you've got no new inflection points to key off of here on the daily as I pull it up. And this is the type of, to be honest with you, continuation pattern, not wanting to get away from that 214.50 inflection point, not showing any new profiles. So it's not a ripe opportunity, in my opinion, to go short, so I'm kind of eliminating that side of the marketplace. And again, down below, you've got 1996 as short-term support on the S&Ps. And as we take a look at the breadth with our new speedometer here, we're looking at the NASDAQ right now. Positive breadth all across the board, and on our S&Ps as we wait for this to populate. Long term down into short term, pretty much the writing's on the wall here from the long side. So that's the situation on the S&Ps and the NASDAQ. Let's take a look at the DAX. I want to pull that up because if we can get it to pull up. The DAX obviously being the weaker, a little bit better leverage here on the DAX around that 93.06, 93.20. Considering that the 93.20 is that daily unfair low and weekly unfair low, 93.06. How are we doing on connection? Are we okay? Okay. Having a little problem with this e-signal chart. You know, I'm a little bit bigger fan of shorting this than any of the S&Ps or NASDAQ, the U.S. situation. You know, the euro's been getting killed, repricing itself in euros, all that kind of jazz. It's a relatively simple scenario to me with stops above that DMZ and just trying to let this thing unfold a little bit on the downside. And hopefully we can get some new inflection points on the downside on the long term. Now, on the short term, as we had talked about, leveraging off that 0620 area, we did meet some short-term targets down at 92.10. As you can see that. Let me blow that up a little bit for you. And the first technical damage to really start pounding the short table would be getting down below 92.10, and hopefully, you know, if the U.S. markets do turn around, this thing will probably fall a little bit faster, in my opinion. Let's take a look at the Nikkei relative to all these yen situations that are going on. No new information here. Big time support, 16,455. Short-term support at 17,135 has been broken. So, again, you've got a 16,505 sitting down there on the 240s, and you've got 16,455 sitting on the weekly. So now to buy the Nikkei, you kind of need to sit tight and wait, in my opinion, for that to kind of come down. And hopefully at the same time, we may have some new daily boxes appear. You've always got to be sure to put stops in on these runaway trailing stops if there's no inflection points and you're still long in the spirit and the theme of trying to let things breathe. That's always a good case scenario. Got about 30 seconds before we're going to go to break here, and they're going to pick Eric up. Let's take one more look at crude oil before we go to break. And we talked about short-term nothing, daily nothing, weekly nothing. I forgot to mention the 60-minute. Even on the 60-minute, this thing's just got nothing to hang on to down here. And even if you're trying to trade crude oil on a very short-term basis, in my opinion, this is something that needs to probably be just patient on. And, again, if you're short this product, enjoy the ride down. We'll be right back in a couple of minutes, folks. We're going to bring Eric Courtney in and talk a little bit about the Japanese situation, some of our own elections, some drillers and some fracking stocks, and Bitcoin. Again, we'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Talked a little bit about crude oil, a couple of global indices, currencies, usual suspects, just to get that out of the way, give it kind of an update there. And I hope now we're going to go to Eric Courtney. Eric, you with us?
Good morning. Yes, can you hear me?
Hey man, how are you doing? How's
John?
New York treating you today?
Hey, the world's treating me pretty well. The weather's very nice up here in New York. It's election day. And thank God the commercials will be over for another couple of years, you know.
Thank God.
New York is an amazing city when it comes to an election. They don't talk about issues. They talk about who's getting divorced, who's doing drugs, who got caught. You know, it's politics has gone downhill since the days of Gary Hart when he was on the boat. Do you remember Gary Hart, that name?
Gary Hart and that beautiful, what was her name, Rice? Is that her name?
Yeah, you're right. That's right. That was the beginning of it. But John F. Kennedy could go around the corner and do whatever he wanted with anybody. But all of a sudden with Gary Hart, the whole world changed. And that's where we are. That's where we are. But I wanted to talk about elections today in general.
Let's do it. I mean, you're kind of right there in the thick of it. And what's on your mind about this?
Well, I'll tell you a couple of things on my mind. One is I can't figure out why everybody hates Obama so much, but I understand it. I mean, I think that the average guy has not done well. The inequality situation is huge and getting worse. No one is addressing it. I think Obama has been a very pragmatic guy, a president who, you know what, the two things in presidents you look for? You look for a statesman. Nixon, I think, was a great statesman, you know, with the opening of China. Kennedy was a great statesman with the missile crisis. Or you look for a guy who really has legislative insight and knows how to get laws passed. Who's better than Lyndon Johnson, you know, 50 years ago, civil rights and all the other. Obama doesn't seem to be either one. I mean, he couldn't get anything done with Congress. And he's not a statesman. I mean, I don't think Europe would line up. You know, they line up at a parade to see him, but he's not a statesman. And he's caught up in. He reminds me of Carter a lot in terms of, you know, good guy, hardworking, smart. You know, but we had expectations that were never fulfilled, and I think that it may have been a little bit early for us to have those types of expectations on a president of Obama's background. I don't think the country really ever, a lot of the country never really, you know, jumped on the bandwagon.
It's kind of a matter more of theoreticals rather than practicalities, you know? I mean...
Yeah, you know, it's like, are we ready for a woman president? We were supposedly ready for a minority president. Are we ready? You know, who the hell knows what we're ready for? But I will tell you, this election that we're seeing now is a non-event, because I don't care if the Republicans take it all. They're not going to take enough to override any veto if anything really dramatic happens.
Right.
20 years ago, you had the 94 midterm elections that killed Clinton, when all the Republicans, they put a book out to say, you know, let's beat Clinton. And it actually helped him, is really what it did, because it got him away from having his base as much as he had to. And I think this election is going to hurt Obama a little bit, but, you know, he seems pretty, you know, aloof to it. He's, you know, aloof is the right word, really. I mean,
that's a good word. I was going to say, I was going to commend you on the choice of words there.
Isn't it? It's funny. I mean, you know, I want to like him, but if you asked me to put something down that, you know, Obamacare may be his biggest legacy. I don't know. Or being the first black president certainly will. Right. But he's not a great statesman, nor is he a great legislative president. And the country is in a very bad way over this inequality right now. Right. I think people are mad because they... Huh?
Yeah, go ahead. You've got some answers that we talked about earlier about that. I'd like to talk about them in detail if you can hang around. We got about 30 seconds before break. Yeah, we've been kicking around, you know, some concepts about, you know, some analogies that are going on in the world that I want Eric to expound a little bit on about, you know, inequalities and how, you know, how maybe those things may turn in the future, in the very near future. And Eric, if you can hang around, you know, right after the break, I want you to come back and we can kind of discuss that. We're going to talk a little bit about the old drillers, fracking, and we're going to talk a little bit about Bitcoin a little bit later. But hang around, Eric, if you can, and we'll pick it back up after the break.
Got it.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We've got Eric Courtney from New York. Eric, are you still there?
Yes.
All right. Okay. So we were kind of drilling down into some of the inequalities you were speaking of, and then, I know we had talked earlier about a couple of things. Would you like to expound on that, or?
Yeah, I think there's a couple of things that have happened. One, the Japanese situation is humongous. I mean, it's not a light thing. This is amazing. If we had done this type of thing and said, we're going to increase by 100% our holdings of our pensioners and annuities and social and money into stocks, and the world would just go crazy. But the Japanese situation shows how difficult things are outside of the U.S. right now. Not just Japan, not all of Asia. Of course, China is still number one, India number two up there, and they're going to continue. But Europe is really, they cut all the forecasts today. those who recall the studies about the Depression, they know that we turned it around 33, 32, but we went back downhill in 37. That was a double dip back down the slide, and I think Europe remembers that.
There was nothing good happening on that double dip. That was actually probably worse than the initial. I mean, I've read a lot about that, but go ahead, yeah.
Yeah, and the guy who, Maynard Keynes, was the guy who showed how to delicately walk through all the variables involved in terms of unemployment, inflation, the Fed money supply, etc. And we've gone through. I mean, Keynes was dead, and when stagflation came along, everybody said, "Oh, Keynes was wrong." But now they're coming back to Keynes. But I think the Japanese saying, you have to own companies. You got to have ownership. That combined with what I heard Yeltsin talk about a week ago around Halloween when she made a speech. And John, she mentioned inequality, in that speech about 10, 12 times. She is very, very concerned about the inequality. And again, I go back to that show we did on capitalism in the 21st century where the middle class is going from owning 40% of the game of this country right now, which is probably a $90 trillion game, to 25% of it. That 15% difference is going to go upstairs to the very wealthy who already own it, 60% of it anywhere, it seems to me. So what Yeltsin is worried about, and the economists are worried about, I mean, I heard a story about the interviews about guys saying, I'm not worried about not getting a job out of college now. I'm 23, I'm 22. I'm worried about when I'm 28 and I'm still working as a barista at Starbucks and I've got a degree. That is an inequality result. And I think that what the Japanese did by saying ownership of stocks was a lead for this country, whoever is running in 2016, that can come out and address inequality and come to the point of view, I believe, that employees have to own a piece of the action in the companies they work for, or some way of incentive is going to win the election. I don't know who it's going to be that can think out of the box enough to say that, but the only way to cure this inequality problem, and it's a devastating problem, is going to be to give them a piece of the pie. Not just say the pie is bigger. That's what the people have always said. Oh, we'll make a bigger pie and then trickle down. That never worked, Austerity doesn't work. The Germans, we're going to balance the budget. Well, you know what? They're just cutting everything right now in terms of their forecast today. It doesn't work. The thing that works is fiscal policy that makes sense combined with proper and compliance with what you need to do on the money supply and the Fed. The Fed's done its job. It says goodbye. Yeltsin has really, in my opinion, said, I'm not worried if the wealth of this country in the stock market goes any higher. I'm worried more about the inequality. And that could mean a major sea change in thinking, because we've pumped the money into the system to keep the market where it is now for 5 years. So people better be prepared for, some new approaches. And inequality, ownership is the only way you're going to beat it. How else are you going to do it? You got to have people own a piece of the game. They got to have some skin in the game. Otherwise, they're not going to ever. Their wages are not going to do it. Not with the electorate we have, and not with the Congress we have. You're not going to get wage increases.
It's interesting, some of the things that you're saying, because you're talking about kind of the way of the future and how this thing may change and why it may need to change. I mean, in the days, as my mother grew up in the Depression. She's 88 years old, and in the days of the Carnegies and the Vanderbilts and all that, I mean, those were such different eras. And did they give anybody ownership? Did they have to back then? It was a totally different era. But now we're kind of shifting into, I'm kind of skipping quite a few episodes of American history. But as we move
you're
forward,
making sense, though. Yeah.
But if you're a business owner, you're a business owner, Eric. I'm a business owner. There's quite a few guys listening to the show's business owner. If you want to really get the most for your company and from the employees, you offer a chance to have skin in the game, because, that's just the way that you kind of bring everything together, and leaving people out and having this disgruntledness or whatever you want to call it kind of fester within a generation, so to speak, maybe even those are the people that vote, those are the mass of the population, and this is, I think you're dead on when you're talking about this right now.
Yeah, and I think there are ways that we could do it. If I don't expect Congress to get along. I don't expect politics to get along in my lifetime going forward. I think they're all I don't want to use any bad words, but you know what I'm saying.
Right, yeah.
The bottom line is that, look, all that money offshore that the companies keep offshore, they've just gone through all these new things of these new tricks on how to keep it offshore. Somebody come along and say, listen, we bring that money back. Here's what we're going to do. We're going to give you a great incentive to bring that money back. We're going to charge you next to nothing on it. Bring it back to this country and build and start training. Forget about opening job offers. Companies have not wanted anybody to work for them. They wanted to buy their own stock. They wanted to go back and raise their dividend. But they've got to see look, businesses, they're smart. Capitalism still works. As far as I'm concerned, it's still the best game in town. Democracy is still the best game in town. Freedom and all those good things the conservatives talk about, I agree with a lot of that. I was, but note this, I was a Nixon advance man in my younger days. In 1970, he didn't travel much that year in 72. He was too busy looking for the keys to the Watergate apartment. But I've become an independent, more or less, in political thinking. But I get where people are sour. I get where the conservatives are coming from. I even get where a lot of the people, that are looking about, solving the debt, the crisis of this country in terms of the debt. But those things I can't handle. But I know I could handle it if I was employing people, how to help them get incentivized. This country, we only have 3 AAA companies in this country. Just 3 AAA, Microsoft, Exxon, and J&J, Johnson & Johnson.
That's flat out amazing.
So we got to be realistic. Some of the things you and I are talking about before as markets, I think will be benefiting from sort of a deadlocked Congress again. They're not going to do too much there. So the markets will be on their own. The rates are low. Earnings seem to be coming in. Exxon had great earnings. And bringing me to the oil situation, taking a look at these oil stocks, I swear to God, somebody out there...
Yeah, let's get into that. Let's get into that a little bit.
Let's look at some of these stocks, because the bad news is all out. I know the politics of it. The Saudis were the ones who controlled the euro back in the in the early 2000s. That brought the euro and bought it and rallied it up from a dollar euro to a dollar American dollar, up to $1.34. Because you know why? They were after 9/11. They were afraid we were going to take all their money, so they bought euros, not dollars. And that's what they did. Now, they're doing the same thing. I think they know damn well that if they bring the price of oil down, they're going to hurt the fracking situation. Well, that's not true. That's here to stay. Our independence is here to stay. They can have votes in countries and in counties in this country, like in Denton, Texas, about we don't want fracking in our backyard anymore. That stuff will happen. But our independence, because of fracking, is here to stay. The rail industry and all the other things we've talked about. But right now, I think some of these stocks are worth taking a look at. And I'd love on your scanner, if you could highlight a couple of situations you're seeing. Are the oil stocks all on their ass, or what's happening there?
Yeah, they're taking it on the chin here. I've got EMES, which is a pretty decent fracker up right now, kind of hanging in there, especially relative to what oil's been doing, and I guess it doesn't really care too much about what oil's been doing. I'm going to pull up SLCA, and that is Silica Holdings. Again, kind of a big fracker, not looking great, but hanging in there. I mean, not caving in with oil. So, here's the profiles I'm showing on the screen right now. Alternatively, I just had Rig up, RIG, which is kind of the standby oil driller here. Noble Drilling. Rig is trading below profiles. These are all things that are picked out on our scanner as, for lack of a better word, dogging it pretty hard lately. Here's Noble Corp. Again, Noble Corp's kind of hanging in there on a relative scale. Let's take a look at RDC, Rowan. Kind of hanging in there actually. But here's the profile information. I'm showing it on the screens here on RDC, and then you've got Diamond Offshore. I want to look at that one here. You can get these inflection points right off the scanner. You can mouse over. You can pull up the stock. I'll just do that for you really quick. Got this on the screen, and I'll go into our kind of search criteria here. Let's see. What am I looking at? Let me clear everything out. Well, Eric, I'm going to do this while you're talking. We got about 3 minutes left on this section of the show, and then we're going to kind of go into the last 5 minutes after a 5-minute break. But for the next 3 minutes, can we talk a little bit about Bitcoin and BitMEX? Because I had the guy on from BitMEX before,
right?
And then you and I talked about how that current so-called currency is going to just, at some point, the world is looking for a global currency. What's your thoughts on something like that?
I think I used to kind of was negative about it. I thought it was nonsense.
Me too.
Somebody is fooling around. Look, they got J.P. Morgan, going to jail for forex trading. I figured there's a new way for guys like that. Smart boys from the computer whiz high frequency traders to get a new game they can play. But I don't believe that anymore. I listen to some people, and I've talked about this with people. I think you've got a virtual wallet with the technology we have today. There is a virtual wallet on your iPhone, your smartphone, your computer, etc. And somehow somebody's going to figure out how to use it. We are going to, through the technology, develop some sort of an exchange medium like a Bitcoin. It won't be a store of value. That's a sovereign game. That's a different situation. I wouldn't want to say, children, you're going to inherit all my Bitcoins, okay, when I die.
Right.
But the bottom line is, I think that now it started off with a lot of drugs, being able to buy drugs with Bitcoin. Do you know, John, by the way, who the two highest paid guys that come out of computer science schools are? Guys who do pornographic and drugs and gambling on the internets. Those are the highest paid guys that come out of MIT. Is that amazing?
I can believe the gambling and the porno side. I didn't know about the drugs being the online Viagra's, I would assume, right? That type of
it's become huge. And marijuana, I mean, you can only laugh and stand back and watch. Right. It's nothing new. The philosophers were high. I mean, Aristotle and those guys had this secret potions they used to knock down. So, this is nothing new. But I think what is new is Bitcoin's BitMEX derivatives. Arthur and Sam Hayes have a story there. I'm not sure that something may not come along better that could hurt BitMEX or Bitcoins, but I do believe that you're going to see their futures operate, and I think they're starting this month. It'll be interesting because you're in on the ground floor with these guys. It'll be interesting to see how it develops. There's a lot of things that is... Go ahead.
Arthur, the guy, the BitMEX guy in Hong Kong, I'm going to be seeing him again in a couple of weeks when I cruise through Hong Kong again. And, he's got a great idea. I mean, me. I mean, I can't just toss stuff in the wind. And BitMEX really kind of, it solidifies the Bitcoin game, in my opinion. And it's done very professionally, what he's put together with real market makers and the ability to hedge Bitcoins in general. I tell you what, we're going to go to a break.
Thank you, John.
Yeah, I'll tell you what, we'll pick it up. I'll call you after the show.
Okay.
And, all right. Thanks for coming on today. Really appreciate it.
Thank you.
And great information. Okay, bud.
Bye-bye.
Thanks, guys. We'll be back in a couple of minutes.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show, and thank you, Eric Courtney, for coming on. It's just get a lot of good perspective listening to him. Just not a total timely tool kind of conversation to trade today's S&Ps, but really good to hear some of the thoughts that are mulling around here. Here's Alibaba. This thing's been obviously not, in my book, really tradable until we had some information come out, and we talked the other day about getting near 100. The psychological value of 100, it's kind of a blow through day trader's little dream. When you get near there, it blows through. Then we kind of do the will testing type game as we come back. But now we've got a profile that's appeared, and this is an intermediate profile. And here's the information: 167 and 95.55. We're obviously trading above there, and I think this is yesterday's. Yeah, what are we trading right now? Okay, we're trading 170. It's trading kind of quick here. 100.70. Okay, so we're right now pre-market. We're kind of coming back to this area. So, this is kind of a fence, I think, that you can lean on from the long side and the short side. I'm not a crystal ball kind of guy with what's going on with Alibaba, but thank goodness we do have some profiles now to key off of on, and maximum support is going to be around 95.55, and I think that's probably where you could wait for any types of pullbacks on Alibaba, in my opinion. Let's move on to Tesla, just to cover a couple of stocks that kind of the stocks du jour. Well, Tesla kind of came off that 41, 42 area that we talked about, the weekly and daily inflection points, and kind of crowded back above. Now we're sitting above, and that's kind of like, all shorts are off for me at this stage. We're trading pre-market 240, so again, we're kind of see how this thing opens. But the shorts, waiting below 40, 42. We're trading 240 and some change pre-market. You may be able to put some stops right above that DMZ if you're going to play the short game. But we had a close above. Let me just make sure that's the case. Sometimes e-signal fools me a little bit here. Yeah, had a close above, not too much above, with a little bit of noise factor, not much. But if you're going to play the short game with Tesla, at least you know where you put your stops above, and put your risk-reward scenarios relatively high in this one. Apple, just to cover a couple of stocks that people are trading on a day-to-day basis. Pre-market about 109.32. Again, getting above the 102.38. It was kind of okay to be long, not okay to be short. Haven't really looked back. This is unbelievable. Apple's just, let's see if you can get up to short-term here. So the short-term inflection points now, 108.50, 107.30. Okay, that's the battle points on Apple, in my opinion, and that's the way we're looking at Apple. So let's take a look at Google really quick. Some more household names if you guys are out there day trading stocks, or Google's kind of gotten back above, retested, floating around up here. Okay to be long, not okay to be short. 562.37. 562.37 pre-market. Here's the short-term numbers on Google. 562.5, 555.58. Those are the numbers on Google to pay attention on the short term. But again, until we start seeing any kind of technical damage on the short side, I'd kind of stay away from shorting this at this stage on Google right now. Guys, thanks for joining us on the show today. We're going to be back tomorrow. I may have a fill-in because Wednesday, Thursday, and Friday I may be going out of town, but that schedule's yet to be set yet. So if I'm not around, we'll have somebody filling in. Thanks for joining us today. We'll be back in tomorrow regardless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.